Yes, there's always good opportunities. You just really have to figure where they are. And real estate has always been a location industry. I think the challenge now is figuring out what is a good location now. I think there's been some change there. So we're going to need some time to figure out where are the best opportunities for sure in this new context. I think we will see a lot of brownfield development projects announced in the next 24 months, especially in industrial. Reason being that the greenfield are becoming a little too far from the population and especially labor centers. Uh, don't get me wrong, I think there are still some great opportunities in suburbs. South Shore and Laval and Terrebonne seems to have very solid fundamentals. Amazon recently announced that they would build like 1,500 distribution centers in suburbs across the US. So you see, there is a growing interest in industrial and suburbs too. So it's all about being able to track where the customers are, where the labor is, and figuring out where are these new opportunities. But for like as any type of investment, as the risk is getting lower and growth perspective are in the green, the yield tends to get a little lower. And I think that's what's happening with the cap rates in industrial right now. The increase in rents have put a tremendous pressure on the land prices, and we're close, if not already, in the $30 per square foot for some sites. And the construction costs have also increases in the past 2 years or so, almost at the same rhythm. And I think you're practically going to need to have 11 or $12 NER in order to make these sites profitable. So although there may be brownfield development projects announced, I'm not sure that the majority of them will really have shovel in the ground next spring because of these increasing costs. So for the time being, I think that the good quality existing industrial sites still have the edge. And one of the alternatives that we may see more and more as the construction costs and land costs are increasing is repositioning older assets through roof lifting. It's something that's been around for many roof of industrial properties, but until now it did not make a lot of sense to do it in terms of economics, but it's getting more and more interesting, and we may see it in the coming years. A lot in Montreal because the portfolio is very old, but we have these cluster of industrial properties that are very well located close to urban centers. So I think properties around 50 to 200,000 square foot are very good candidates for roof lifting.
Since Sam and I founded Rosefellow in November of 2019, we always had people tell us that the good opportunities are gone. We never believed it. We've been able to acquire over 3.2 million square feet of land in the last 11 months. We have another 2 million square feet in our pipeline. We have 270 units of residential rental under construction and another 1,100 units in our pipeline. We believe that if you're dedicated and you invest the time and resources and stay close to the brokerage community, you'll always be able to find the next big opportunity.
Absolutely. We're a big developer, so that's a big focus for us. Land prices in Montreal have continued to be on a rapid increase, and every transaction seems to be going at higher and higher prices. So I think I'm not alone in believing that development is something that is worth investing in. We continue to see lots of opportunity in the multifamily space. We're in the market right now raising a fund to do, $500 million of multifamily development. Again, I don't see a lot of the fundamental trends that were present pre-COVID changing. And I think, the one of the interesting elements and the attraction of Montreal for a lot of non-Montreal based or non-Quebec based investors was the cap rate advantage and the cost advantage. So yes, we're getting closer and closer to pricing levels that you would see in other urban markets. But I still think that there is an advantage there. And there's a reason why that, pre-COVID, and I think that will continue, so many foreign investors or outside of Quebec investors have been looking at Montreal. I think that attendance levels at last year and this year's Montreal Real Estate Forum are a testament to that. So I think that there's a lot of opportunity for good returns.
I definitely think so. One of the reasons why is a lot of Montreal-based owners, and also I'm seeing owners from Canada, which are refinancing right now their equity at very, very low interest rates. And they are also using the CHMC to do so. So with better conditions of financing, longer amortization periods, well, they have money that they have to re-inject on the market. One of the opportunities you're going to see right now is with the COVID period, there's a lot of small owners in Montreal which own properties, 30 doors, 40 doors and less, which are putting up the properties for sale in advance in a very controlled market, not knowing what the future is going to bring to them. So the opportunity right now is to bid on those properties, get them for a good price, and work on the value add properties that we have in Montreal.